Hey guys, I'm Felix and welcome to Fiscal Voyage. Wondering if Johnson & Johnson is a good buy right now? I would let you know if it's a buy, a sell, or a hold in 1 minute, starting now.
All right, so here's the 1 minute review on Johnson & Johnson. Remember, I'm not a financial advisor. This is for entertainment and educational purpose. So let's start. Johnson & Johnson became incorporated in 1887. So they've been in business for over 130 years. And I see them in business for another 130 years, to tell you the truth. Right now, for the past 10 years, revenue grew at a compound rate of 1.82% from 2006 to 2016, which is not really great. But remember, Johnson & Johnson is a huge company. Net income did grow at a better rate at 5.09% at the same time frame. The good news is share count has been decreasing since 2012 because of buybacks programs. Right now, S&P Capital gives a credit rating of AAA, which is the highest rating any company could get from S&P. Right now, last year, Johnson & Johnson made earnings of $5.93. Currently, they have a dividend yield of 2.4%. Their 5-year average dividend is 2.9, so the current yield is at a lower end. Dividend payout ratio is a great ratio at 47%. I like to invest in companies under 60%, which this falls in line there. Net margin is great. This is how much money they keep out of the revenue, so they're keeping 21% of it. Debt to cap is good, and their 5-year dividend growth rate is 7%. The Crowder rule is at 9.4. Normally, a company you would like to see a 12, which is your dividend yield plus your 5-year dividend growth rate. They have it at 9.4, so this is on the lower end. Johnson & Johnson been doing dividend growth for 55 years, and I expect them to do another announcement on an increase in sometime in April 2018. Their last increase was 5%. I expect something in that range as well in April. The future outlook in 2017, at the end of this year, Johnson & Johnson is expected to earn 7.29 earnings per shares, and 2018 $7.78, which is higher than this year and last year, 2016. So that's good. Analysts expect Johnson & Johnson to have a earnings per share growth of 8%, and I see that as well. Forward PE right now is at 18 versus their 5-year average of 19.8. The PE looks good, but let's take a deeper look at it. Here we have a fast graphs of Johnson & Johnson. The black line represents the end of month price, and the blue and orange line represents blue representing normal PE and orange earnings. We see that Johnson & Johnson price is higher than where earnings and the normal PE is. That means that the price is slightly overvalued, where fair value or undervalue will be under or at one of those lines. And let's find out how much a fair value price is. On the left, we have CFRA rating of $123.35, and if we see the other ones, and my dividend discount model analyst gives me a 91.49 fair value. Adding all these up and getting the average, we get a fair price of $117.84. Currently, the price of Johnson & Johnson as of today is $140.52, which gives the stock a overvalue of by 19.25%. With that, my recommendation right now on Johnson & Johnson will be a hold. I will wait for a significant price drop before I will buy more Johnson & Johnson shares. I would be consider Johnson & Johnson under 120 a share. but right now I will give it a hold. If you agree with my analysis or don't agree, please leave a comment below. Don't forget to subscribe and hit the notification bell to be notified for my next stock analyst video. Thank you for watching, and make sure to visit my website as well, fiscalvoyage.com. Thanks, guys.